It's official. Mark Chaikin just went live with the biggest prediction of his career. A new wave of volatility is coming for the stock market, and investors need to act immediately. Mark's prediction is based on an indicator that has only triggered a handful of times in the last 72 years, with a 100% success rate for predicting where stocks will go next. During Mark's 50-year career, he's worked alongside some of the biggest investors in history, including Paul Tudor Jones and Michael Steinhardt. In fact, Mark invented one of Wall Street's most popular indicators for picking stocks, still used by hedge funds, banks, and brokerage sites, and today found in every Bloomberg terminal on the planet. Now, Mark's inviting you to watch his brand new event as he explains exactly what the next wave of volatility will look like and where it will send stocks in the coming weeks. He's even sharing one of his favorite ideas free for those who tune in. He says this idea could create bigger gains than anything he's used his power gauge system for until now by turning the coming market volatility to your advantage. But Mark says you must act today before volatility hits the market. To watch his newest prediction in full, go to chaikinevent.com. That's chaikinevent.com. The last time we saw each other and spoke was in Orvieto, Italy, which is an interview I'm sure many of you saw. It's probably one of my favorite interviews. 6 months ago, where you basically spoke about everything that's unfolded within these months. And I thought it would be an interesting conversation to share with everyone in this room the next chapter you see. Where are we going? And most importantly, how do we navigate these times? So before we start, obviously, we are in Zurich, where we saw the bank runs, we're in the midst of it, and I don't want to spend too much time on it, but did it shake your confidence? I mean, as you saw bank falling like dominoes, what was going on in your head?
It was bound to happen. When we last spoke in Italy in October, I'm pretty sure I said, if the Fed keeps this up, something's going to break. And that's simple arithmetic. You know, you've got a world that's loaded with debt, over $300 trillion, which is over doubled in the last decade, and which was created under easy money, under very low interest rates, artificial low interest rates, and then that changed suddenly because only for one reason, because the Fed lost credibility and they felt they had to act. And I kept saying, you keep doing this, you're going to break something. And the problem is that black swan events, by definition, you can't predict specifically what's going to happen. You can only tell once the black feathers start flying, and then you know it's happened. So whether it was Credit Suisse or the banks in the U.S., it could have been anything. And by the way, there's more to come. This is not over. You know, you can't have a system loaded with so much debt, so many derivatives that are opaque. You can't see through what's going on there, and then have rates jacked up by 5% and think that nothing's going to happen. So I think we're just seeing the beginnings of a great unraveling. The bear market, which started, a while back, which we talked about, it was coming. It's bear markets play out over a long period of time. But I think more importantly that the world financial system is going to go through a tectonic change. And I don't think anyone's prepared for it. I think most people, especially in America, are oblivious to the fact of what's going on. They just think that the US dollar is going to have supremacy forever because their entire lives the US dollar has been the supreme currency. That's changing. And when we spoke in Italy, I said it's about to change and this is what's going to happen. I give you the reasons why. And now we're in the middle of it. And it's just starting.
So let's talk about, and I don't want to be the Debbie Downer of the event here, but these
you
are
started it.
It's like we have a nice light conversation for everyone tonight. But I want to recap some of these clues that led you to your theories here. We can talk about the record central bank gold buying we saw this year, which I believe was one of the main clues for you. Is that correct?
Well, I've been watching the central bank gold buying since when it started in 2010. And all that's happened is that it's accelerating. Last year was the largest buying on record of central banks around the world. And that gave you your first clue. Why? Why was every country in the world, except the West, de-dollarizing and going into gold? You just ask that question, and then you see everything else that's going on, and you start to develop your clues.
So my main question to you, Frank, and this is what I'm still having trouble wrapping my mind around, is why would the US just watch this happen? I mean, we see Saudi Arabia and Iran getting cozy with each other with a deal brokered by China. We obviously see the closeness in relations between China and Moscow. What is the US thinking, and are they not concerned? I mean, obviously they don't want to lose the US dollar status here.
Absolutely, they don't. But I don't think they saw this coming. And by the way, the Saudi-Iran deal, which was brokered by China, surprised everybody, including the U.S., although they won't admit it. You know, I'm part of the International Crisis Group. I chair that organization. And so we were actually in Qatar when that happened. And we had organized some dialogue privately between Iran and Saudi Arabia some 4 years ago, between, you know, just not officials, but people within the elite groups in both countries, to start a dialogue. And then Iraq and Oman took over the conversation, but no one saw this deal coming, no one. And yes, the U.S. is definitely worried that they're losing their power in the Middle East, but in essence, they chose that, they made that decision a while back to pull back from the Middle East and focus on containing China. And so what did Saudi do? You know, while the U.S. was protecting Saudi Arabia, it was happy not to engage in diplomatic relations because it would always come to its defense. But then when there was that attack by Iran, we knew it was Iran, but they never admitted it. There was an attack on the Saudi oil field facilities, and the U.S. did not come to its rescue under Trump. Saudi Arabia decided, whoa. Now, if America's not there to help, we have to do two things: cozy up with China and start dialogue with our foes. And that's how this all came about. And it's because America withdrew diplomatically and militarily, in a sense, from the region.
Okay, so let's say they didn't see it coming, right? They're blindsided, but they must have tools in their kit here that they're able to. Do you not think? I don't know.
Tools, tools to address which part of it?
To save the power of the dollar.
Oh, okay. We're talking about the dollar. Well, that's a whole different scenario. So when the changes were already happening prior to the Ukraine war, there was a movement, obviously sponsored by China and Russia, to move away from the U.S. dollar, and they were making all sorts of noises about having a different alternative reserve currency. But when the Ukraine war started, and America and the West applied the sanctions, the U.S. dollar sanctions, the SWIFT sanctions, most of them, to cut Russia off from the SWIFT, that had unintended consequences. And I don't think the U.S. really thought it through. They were so focused on how do we take down Russia for this aggression that they didn't think about two things. They didn't think about what banning Russia from the SWIFT system would message to the rest of the world.
Right.
And they didn't think about the consequences of inflation, because food prices and energy prices skyrocketed. You know, a lot of the grain and fertilizer comes from Ukraine and Russia. Oil, lots of it comes from Russia. And so I don't think, people seem to think that the policymakers in Washington or other capitals really understand what they're doing. And you'd be surprised how little they think these things through sometimes. They act and without thinking of the consequences. And I think the consequences has now created a global movement to move away from the dollar. It's not just China and Russia now. Now you got the BRICS nations plus all the new members that want to join BRICS. Iran, Saudi Arabia, Argentina, Algeria, UAE, Egypt, Turkey. The BRICS is going to expand as a trading group, and they want to create their own currency. And now they're very vocal. When we spoke about this 6 months ago, it wasn't being talked about. Now they're talking about it openly. And I think that's the direction we're headed towards. And I think it's going to happen sooner than people think. I don't know how long it'll take to implement, but I think the conversation about launching some alternative to the US dollar for trade and settlement purposes is in the works.
Yeah.
And I also believe that it will have, the gold's going to play a role in that.
Okay, few questions here. Now that we've opened Pandora's box. So fresh news out of Russia this week that they want to do trade with the BRIC nations using the yuan. So it's like the birth or, the petroyuan, I guess, the emergence of that, right? So is that part of the equation you see?
Yeah, absolutely. And so China China has moved very quickly in the last 12 months. And now you've seen China talk about its special relationship with Russia. It talks about its all-dimensional energy development program with Saudi Arabia and the Gulf countries. It talks about its strategic comprehensive partnership with Iran. And it's all meant to do one thing, to do two things: to buy oil at a discount, which is buying from Russia, Iran, and Venezuela. And by the way, 3 countries that are under sanction by the U.S. hold 40% of the world's oil reserves. Okay? And China is benefiting because it's buying that oil at a discount, and it's forcing those nations to take RMBs as payment, not dollars. So it's already establishing a pathway to trade in what we're going to call the petroyuan. And it might achieve success, it might not. I think that the alternative currency will be a basket as opposed to the petroyuan taking over from the dollar.
Okay.
Okay, but China is basically kumbayaing with everybody right now.
Exactly.
And they're doing it because they see an opportunity now, and they're moving very quickly. And that's why they decided to become a broker to the Saudi Arabian Iran situation, because it allows them to secure their long-term energy needs.
Is there a tie-in with the narrative that we see coming out of the U.S., and this is perhaps a controversial topic, but the shooting down of spy balloons and whatnot? They've obviously created this. China is now numero uno. It was Russia maybe last month, but now it's China again. Is there a danger there?
Of course. Here's what worries me. I have kids, like many of you in this room, and I worry about what's about to happen, because almost never in history do you see a transition from one global power to another without conflict. Okay, it only happened in the recent few hundred years between the UK and the US after World War II, and there was a peaceful transition. The British Empire came crumbling down, and America took over because they had most of the world's gold and half the world's GDP after World War II. So they were basically it was gold that provided the ability for them to take over the financial world. And they had it until 1971 when they lost their trust by going off the gold standard. But I think the problem is that, the United States is painting China as a dangerous enemy that has to be contained. But the reality is that they're seeing China's economic might taking over, and that is putting a lot of fear into a lot of Americans, and they're not going to go down without some form of a fight. So I just hope it's not a hot war.
It's part of a strategy, part of a bigger strategy.
It's a containment strategy to try and cut China off from other relationships.
But based on what you're saying, you fear a hot war.
That is my worst fear. I certainly hope it doesn't happen. I really, it's our organization, Crisis Group, is in the business of trying to prevent that sort of thing. So, you just hope that, cooler heads prevail. But, the rhetoric is just becoming crazy. And China is becoming more vocal about its military strength and what it will do if certain things happen, especially over Taiwan.
Zoltan Posner of Credit Suisse said that we haven't seen a crisis like this since 1971 when we got off the gold standard. You agree, obviously, with this statement, Frank?
Yeah. If anybody listen, and I alerted Daniela to this report, and it's almost ironic that Credit Suisse wrote a report about the tectonic change taking place in the world. But if you haven't read Zoltan Posner's report, it's called "War and Commodity Encumbrance." Read it. It is absolutely bang on. I don't agree with some of his conclusions because he talks about a commodity-backed basket of currencies, and I don't see how that's going to work. It's just too cumbersome, and it really there are certain countries that are going to have advantages over other. Whereas gold is universal; it's easy to be done. It's been done before. But what he points out in that report is factual. All the things that are leading up to this tectonic change, and China is at the forefront of pushing this change and basically changing the world order.
I'm going to tie that in because I believe you see it as a currency backed by gold, and this is why you think China has been secretly, they're coming out recently with their gold holdings, but they're very little, but they're hoarding gold. So what's the plan here? They're going to release a gold-backed currency? And
because we don't have time to get into it. So if you want my theory on what China's doing and why they're doing it and how they're doing it, go back to our interview. It's on Stansberry Research.
Thank you for the plug.
Stansberry Research. It's the October interview where we're sitting outside in my place in Italy. and I walk people through why I believe that China's declared 2,000 tons of gold is not what they really own. And it just doesn't make, my guess is that when they decide, however they decide, whether it's to back the yuan or to be part of a basket of currency SDR type, that's when they will declare their true gold holdings. And I think they're a lot higher.
Okay, so,
and so do, by the way, I'm not alone in this, so do a lot of other people.
So we're obviously at a mining and gold conference. So talk to us about your thoughts on the role that gold will, I mean, look at the context. We're flirting with 2000. Maybe we passed it as we're talking right now. I don't know. But your thoughts on where gold goes from here.
Okay, well, here's what I think is going to happen. I may be completely wrong. I'm speculating, obviously, but I'm looking at what's happened in the past when gold is used to measure a currency and how you create additional reserves and credit by revaluing the price of gold against your currency. Not dissimilar to what the United States did in 1933 when they took gold from 27, first they confiscated everybody's gold and made it illegal, and then they repriced it overnight from $27 to $35 an ounce, which is a 40% devaluation of the dollar. So, and one of the most interesting facts, I don't know if, so what happened, you know, the Bretton Woods Agreement came out after the World War II. America had a gold-backed currency, and other countries could exchange their U.S. dollars for gold. The U.S. started to run out of gold as certain countries, most notably France, started to call for their gold. And in 1971, Nixon took gold off, dollar off the gold standard. Well, you know, immediately gold shot through the roof. But if you look at the other way around, the dollar was devalued. And so what happened in 1974, two things happened. First of all, they created the petrodollar. They did a deal with Saudi Arabia, providing Saudi Arabia with security in turn for a commitment that Saudi Arabia would price oil in dollars forever. It was a deal that's held up, still holds up, although it's starting to crack at the seams. But then another interesting thing happened that a lot of people aren't aware of, and some of you probably are. In 1974, Kissinger had a meeting. He was then Secretary of State. And he had a meeting with this Secretary of the Treasury. And you can look up the minutes of that meeting. They were finally published a few years back. And they were talking about what Europe was up to. So Europe was upset that America had broken its promise and gone out and basically gone off the gold standard. And Europe, after 71, was trying to figure a way to get back on the gold standard without the U.S. And collectively, Europe had more gold than the U.S. And there was this meeting with Kissinger, and Kissinger was being told what was going on about France and the Netherlands talking about finding a way to go back on the gold standard. And I'll give you the highlights of what came out of that meeting. First, the U.S. wanted to maintain dollar supremacy. Kissinger made that clear. Secondly, they wanted to demonetize gold and keep it demonetized. Third, they got wind that this change was about to happen, and that would give Europe the ability to, in their own words, reprice gold price and be able to create more credit and reserves. And in their own words, essentially have a money printing machine. And that would be against America's interests. And they were going to do anything to squash it. That was the word. And in those days, back in the 70s, you know, Germany was protected by America, and there was the Soviet Union, so they used Germany as the means to kind of kill that whole idea. But it gave you a sense of how you go about it. So now scroll forward, and here we are today, and you have all these conversations with the BRICS countries, plus all these members that want to now join, all of them buying gold in great quantities. So if at some point in the future they collectively have more gold in the US, which is not hard to imagine, they can basically say, okay, we're going to create this new currency, and we're going to value it based on gold, either off base money supply or off GDP. And GDP, you could do 4% of GDP like most European countries do. Those are their gold holdings. The other way to do it is off of base money supply. So I'll give you an example just so you can do the math with something we already know. So if America today wanted to create a gold backing for the US dollar, and they use M0 money supply, and they the 20% backing, and by the way, there's a fallacy that you need to back your currency 100%. That's never happened. It's somewhere between 20 and 40% always. When there was a gold standard, it was somewhere between 15, 20, 40%. So if you use a 20% backing of gold off M0 money supply, you would have to price gold at $7,500 an ounce. That's just to give you an example of how it works. So you've got the BRICS, and you're watching them buy all this gold, and they will have, and I'm sure China, when they're ready, will announce how much gold they really have, and then they're going to be able to set the price of gold to create this new currency. No currency in history has ever been launched without a gold backing, including the US dollar. It needs it to have the credibility. Now, eventually, they all lose their discipline, and they all ditch the gold, but you can't launch it without tangible backing because it needs credibility.
So when can I tie you down to a forecast? Frank Giustra says
forecast
gold
anything.
is headed to 20,000.
You know, you've asked me a million times.
I've tried for years.
Because you end up looking like a fool. So why would you predict anything? I don't predict anything.
Let me bring up your other favorite topic, Bitcoin.
I think I'm pretty safe in this crowd. Except for Frank Holmes.
Surprise, we have a debate planned. Bring out Michael Saylor. No, okay. Some would argue, if you look at Bitcoin's performance this week, it's actually been acting a little like gold.
For the first time ever.
Should I dare say that?
For the first time ever. And it's quite surprising, but you're right.
Are you warm, getting a little fuzzy, warm?
No, I'm not getting fuzzy because I'll tell you why. My only beef with Bitcoin were two things. And you know this, we did the Michael Saylor debate exactly 2 years ago. And when Bitcoin was 60,000 and they were saying it was going to 500,000 and a million, and you had all these clownish Bitcoin maxis making all these wild predictions and saying that gold was going to go to zero and Bitcoin was going to 1 million. And that upset me. And that's why I called you and I said, I got to challenge this guy. And we did that gold versus Bitcoin debate. Here's my biggest concern about Bitcoin, besides that it was overly promoted, and it became a cult, and it's still somewhat of a cult, and it was just, to me, it seemed like a bubble. But my real problem is this. If I want to store a value, I want to be able to sleep at night, and I know tomorrow morning I'm going to get up, and my store of value, which for me is gold, is still going to be there. It's not going down by 50% overnight. It's never going to go to zero. There's no chance it's going to go to zero because all the central banks own it. I can't say the same thing for Bitcoin, because all the central banks in the world own gold. With the exception of El Salvador, no one owns Bitcoin. And there's 114 countries developing central bank digital currencies, and when those are launched, they're going to kill the competition. It's as easy as that. And I don't want to take that risk.
Okay, so you know two things that come up often as criticism is, are you afraid that your gold will be confiscated by the government?
Well, see, that's the thing. They may try and steal your gold, but they won't destroy its value because they own it. I can't say the same for Bitcoin. But yes, I think that it's going to be difficult in today's environment to do what they did in 1933, but they will try and find a way to take your gold away from you. If you look what happened in Turkey when they were having 70% inflation and the lira was tumbling, you know, the government was going, please, please sell your gold and buy lira. Why would you do that when the lira has been depreciated by 100%? I mean, so if you're smart, you won't turn your gold in and you'll just keep it geographically safe.
And the thing I'm sure you've heard, well, if central banks are buying it and want it so bad, how do you know they're not manipulating the price down?
Well, I've always felt that perhaps they are. I think that I've had a debate with Rick Rule over this. Has there been, not necessarily central banks, but central banks working through intermediaries, through the bullion banks, through the BIS, have they manipulated the gold price? I believe they have. I have no proof. There's no smoking gun. But you look at the reasons why they would, and we, again, go to our interview from last October, because I went through this chapter and verse.
Wait, I just want to know something. Are you adding silver to that too?
Well, silver will always, I've been in this business since 1978, and I've seen several bull markets in gold. Silver will do two things. It will always track gold, and at times in a bull market will outperform gold, and then in a bear market will way underperform gold. So yeah, silver has industrial qualities that give it other demand issues. And
okay, this is at the central bank level, but when you see it happening at the J.P. Morgan level, what do you make of that? And yet, you know, they get slapped on the wrist. It happens again. What is that?
Greed. I mean, you know, listen, these guys it's easy to spoof markets and make money. So these guys got together and, you know, as a collective of people, and they trigger margin calls by selling at the last couple of minutes of the day, and then they cover when they trigger the margin calls, the sell call, the stop orders, sell stop orders, and it was just an easy way to make money. And, you know, yeah, they fine them. I mean, J.P. Morgan got fined $1 billion, but they make so much money that, you know, Merrill Lynch has done it, everybody's done it.
Let's talk about central bank digital currencies. I'm actually surprised by how fast it's being rolled out. I didn't think we'd see it this fast, but we see the news. Fed payment system we might be seeing in July. And anyways, it just seems like everything's on a fast track here. What are your thoughts on central bank digital currencies?
I think you have to be very afraid, because in essence, it'll give governments and central banks the ability to control your lives. They will know everything you do, every moment you do it, and they can basically direct your behavior, either reward you or punish you for certain types of behavior, depending on how they want to fine-tune the economy. And they can grab your money. It scares me, because I see what China's doing, and China is ahead of the game in both surveillance, in the social credit system, where they rate the behavior of their citizens and they punish them if they don't behave properly. And they're the first ones to talk about a central bank digital currency. But, you know, mind you, they're an authoritarian state, but there's no reason why every country in the world wouldn't go, well, isn't this cool? Now we control everybody's bank account. Now we can make them do what we want them to do, depending on what policies we have. It removes your freedom. And I think it's a very scary proposition.
It's very scary. And let's talk about Bitcoin versus central bank digital currencies. I mean, I know you're not ruling out complete crackdown on Bitcoin because you see it as a competitor to
I don't
CBDCs.
See it. The governments will see it as a competitor, and they'll either come down on Bitcoin. I'll predict this, and you guys can document this.
Okay.
It's on video. Either it'll be death by 1,000 cuts, which they're already doing through regulation, and they can kill it slowly to give it less value, okay? Or they can do what China did, which is say, okay, now tomorrow it's illegal to own Bitcoin, and they cut off your on and off ramps into buying Bitcoin. So you're sitting there with a bunch of code in your digital wallet. What are you going to do with it? You can't convert it into fiat to buy things. And that's because every transaction in Bitcoin is through blockchain. Everything's traceable. So if the FBI, if they made it a criminal offense to own it, much like they made a criminal offense to own gold back in 1933, it's like they can easily trace if you're using it.
Do you have any feeling? I had asked Casey this question. You know, obviously we saw the pilot project in China. There's over 100 companies rolling out, testing pilot projects on central bank digital currencies. I don't feel it's talked about enough. Do you have a feeling of which country could be the first to really roll it out?
China.
China for you?
Yeah, because they're already testing the Bank of China, Bank of Thailand, and Bank of UAE are testing cross-border digital currency settlements right now in a pilot program, and I think that they're doing it for a reason, because perhaps, and again, I don't know what this new currency world will look like, but there will be a competition, an alternative to the US dollar. And one can be just direct bilateral trade and settlement, country to country, using digital currencies. Right. They're testing it, and they're way ahead of everybody else.
One other topic I wanted to talk to you about was the Fed, and it was a Fed day today, Frank. Should I share?
Yeah, go ahead. Go ahead.
We had a bet. I thought the Fed would still hike. Frank, you thought opposite. You thought they would stop. So, anyways, I won't.
No, don't rub it in. By the way, you want a pair of Prada glasses, sunglasses. So,
I'm going to donate it to charity.
Okay,
actually,
you do that.
Anyway.
And by the way, it could have gone either way, and The main issue, it's irrelevant what they did. The quarter-point hike was done. It's not going to achieve a damn thing in terms of inflation because that's the end of the hikes. This is it. It's over, because they know they almost broke the system. But they did it to save their credibility. They had to show that they weren't backing off of inflation. Inflation, folks, is here to stay.
You think that's also manipulated, though?
Well, inflation, the like CPI number is off by 50%. You know, when they publish 8% CPI, if you look at the way they measured it back in the 80s, it would be, you know, 16%. And that's, you can look that up. I wrote an article on this last year. I mean, that's just, and they've changed the way they calculate the CPI like 35 times in the last 40 years. And they keep changing, and they're proposing to change it again. And all they're doing is understating inflation. We all know that inflation wasn't 2% a few years ago. You just had to go to a grocery store or pay insurance or your health bills. Everything was going up. It's manipulated.
So they should have started the rate hikes, what, like 3 years ago?
Oh, God, they should. Okay, listen, as I've always said, the Fed set its own trap in 2008. And there was no way coming back. And I've been saying it since Bernanke was there, going, there's no way they're going to ever be able to bring down, hike the rates on a sustainable basis and unwind the balance sheet. So what happened last week? You heard of quantitative tightening, that whole idea that they were going to take that $9 trillion balance sheet and bring it down. Well, that ended last week. The Fed balance sheet went up by $300 billion last week. So QT is over. It was a nice idea, but they'll never unwind that balance sheet. They can't.
Yeah, and I think this focus on the bank runs is causing us to miss that bigger picture of the Fed is in trouble, and to your point, the US dollar is in trouble.
Yeah, it's in trouble. Now listen, I'm not going to be one of those doomsdayers that you suggest that the dollar is going to crash. But what's going to happen is that when all these pathways to trade outside the US dollar system, which are many now, they're inventing new ones every day just to get outside of the system to be able to trade and settle, okay? Every time that happens, it takes away demand from US Treasury bills. And what I think is when they eventually launch a, whatever the alternative currency may be, it will be a national security issue for the United States. Because think about it in these terms. If the demand for US Treasury bills were to suddenly fall off the cliff, what does that mean? High inflation, higher interest rates, which means how do you service that US debt? And the standard of living would go down in the United States. To me, that's a national security issue, okay? So it's going to be a very tricky thing to implement without creating a global war. And I think especially if you look what's happening with the global south. So you have a number of regions in the world, and everybody thinks of the BRICS as being one monolithic group, but they all have their very divergent interests at minds, which are different. And the global south, which has been held hostage by an overvalued US dollar, would love to see something that's an alternative. But they're going to have to tread very, very carefully, because it's like breaking up with your girlfriend. You don't want to hurt her feelings, so you say, "No, it's not you, it's me. I just want to get out there and date other people." But you never say there's someone else. And and that's the way that this thing is going to have to happen. So my best guess, and I pray and hope that one of two things happen. Either it happens gradually over a long period of time so that people can adjust, or, and I don't think that's going to happen, but wouldn't it be nice if the United States, by consensus with other nations, created some sort of tangible backing of fiat currencies? U.S. has 8,100 tons of gold. It could conceivably participate. Now, my guess is they won't, but wouldn't that be nice?
I guess, Frank, just to wrap on a lighter note, promise it will be lighter. You know, I said you're a mentor to me. I'm sure you're a mentor to many in this room. And one thing that really resonated with the folks in that interview we did in Oviedo, despite all the geopolitical talks, was really the end. Your outlook on life. I call it the Tao of Frank.
But guess what? The land remains. It's impervious to who comes and goes. It's indifferent to the rise and fall of empires. It's here to nourish whoever lives on this land. And I always think, you know, we're just passing through. This is a moment in time, in eternity. And that's why you have to enjoy what you have. And the world's going to do what it's going to do. You can't control those things. And, you know, this just reminds me of the beauty of living.
It's a moment in time, and we're passing through. And that's stuck with so many people. I can't tell you the amount of emails that people were like, you know, you just made me cry with that ending. So I guess just some thoughts for, you know, the people in the room, just, you know, navigating these times of how you can, you know, stay positive, keep your head above water. What do you do to stay focused and not get lost in all this noise?
Yeah, it's tough, but, you know, I found my peace in that you accept that certain things are going to happen in the world as they have throughout history that you have no control over. It's the stoic attitude towards your outlook in the world. The arc of history will continue without your input, and all you can do is, which has been my life, is live a good life, be charitable, take care of other people, be a good person, enjoy yourself, have fun, eat Italian food, drink olive oil, but protect yourself, because you can't change what's about to happen. No one can. The train left the station. Protect yourself. So how do you protect yourself? You know, diversification. Asset diversification, geographical diversification, and skewed towards tangible things. The paper world is about to have a huge reckoning. And paper is bonds and currencies, some stocks, you know. You got to get into tangible things. And that's all you can do, and protect yourself. You're not going to be able to, you know.
And I guess as a final note, look, we're at a mining conference, so I mean, this could be a huge moment for gold, silver, the miners.
Yeah, well, here's what's going to happen. So you're right. So the Fed hiked 25%, gold went up. And because gold knows, the gold market knows, that's it. That's the end of it. They wouldn't dare, because they're going to break something. There's stuff lurking in the shadows you don't even know about. There are fires being put out right now you're not even aware of. And if they keep doing this, they're going to really bring down the entire system. So the gold mining stocks, or silver, or whatever, they've had a tough go. And in my personal opinion, I don't think that the real money, and a lot of the fund managers here will probably agree with me, you're not going to see inflows into your portfolio, your equity portfolios, until gold has a decisive break through the old high. And I mean decisive. It's got to go through the old high and keep going up or get to a new level. People still don't believe. The general public does not believe. And this is wonderful if you own gold, because we're not even at the beginning. You know, gold went to 1900 10 years ago. It's 12 years ago, okay? When we start this next bull run, it's going to do something completely different. And the gold mining stocks, and especially the juniors and the developers, are going to have a hell of a run. And I've seen several markets when that happens, when the craziness begins. And we haven't seen that for a very, very long time.
Well, on that note, I know you rarely come out and do talks. You only like to talk when you have something important to say. So I want to thank you again for accepting my invitation, Frank. It was an absolute pleasure.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.